Hi everyone, welcome back to my channel. Today we are learning Islamic financing. Now, what is Islamic financing? It tells about how businesses and individuals raise capital in accordance with the Sharia law or the Islamic laws. Islamic financing is the idea of managing and making your money and implementing strategies that comply with the moral practices of Islam. It enforces guidance on saving, lending, and investing. So it tells the investors regarding the permissible investments under this law. What are the Sharia laws stating? Sharia law states that investors must not engage or invest in forbidden activities stated by this law. What are the forbidden activities under the Sharia law? Dealing in riba, meaning lending and borrowing which involves any form of interest. Because as per the Islamic financing law or the Sharia laws, dealing or lending or borrowing under interest is a form of favor. So, riba, which is interest, is forbidden. Maisir. Maisir means gambling or speculation. So, any transaction which deals with gambling or speculation, which is called maisir under Islamic finance, is forbidden. Next is gharar. Gharar is something which has ambiguity or uncertainty, like futures and options or derivatives. So, any such activities which have gharar, like ambiguity or uncertainty, which has gambling or speculation, like maisir, which involves interest, like riba, these are the activities that are forbidden under the Sharia laws. So, Islamic financing prohibits the investors to engage in these activities. So, what happens in terms of Islamic financing? There are a few permissible financing arrangements within this. What are these? Let's understand in a summarized form. There is a gist of these financing arrangements that are available. Let's understand in a short summary. So, first one is a profit and loss sharing contract agreement, which is called mudarabah. Mudarabah. This is a profit and loss sharing contract. Here, the Islamic Bank pools the investors' money and assures the profit and loss to the investors, which means it deals with profit sharing and loss bearing among the investors by the Islamic Bank. So the first one is profit and loss sharing contracts, which is called mudaraba. Next is safekeeping arrangements, which is called wadia. Wadia. Now, what is this? This is basically something in relation or similar to pledging, where you pledge something or you keep as a security. So, safekeeping arrangements is wadia. Joint venture arrangements, again, this is also more or less similar to the profit and loss sharing contracts with joint venture details. That is called musharaka. So, mudaraba and musharaka are also profit and loss sharing agreements under Islamic finance. Next, cost plus contracts. These are the financing schemes which involve installment sale agreements. For example, where there is a leased house that is being taken on installments. So these are those kind of contracts where there is cost and plus. So cost plus contracts under installment sale agreements. This is called murabaha. Murabaha. Next is leasing, which is called ijara. Here it involves lessee and lessor, where there is a right to use of an asset which is involved between lessee and lessor. These are the leasing financing arrangements that is called ijara. Next is takaful. Takaful is very commonly called insurance contracts. So, in the Arab world, if you go there to the Middle Eastern countries, you will understand that takaful is a very common term used for insurance. So, insurance contracts under the Islamic insurance scheme are takaful. Next is Islamic bonds. These are called sukuk. So, all Islamic bonds which involve leasing, bond equivalent, or any such bonds which are involved under the Islamic financing scheme and the Sharia laws is called sukuk. Next is istisna and salam. These are like futures and forwards, but under the Islamic Sharia law practices. So there is no ambiguity or no uncertainty involved. These are similar to that in nature, but different in their individualistic approach. So istisna and salam, this is similar to the regular financing for working capital. For each business, it is dealt with individually. So these are the basic permissible financing arrangements within Islamic financing. Profit and loss sharing is mudaraba. Safekeeping arrangements wadia. Joint venture arrangements musharaka. Cost plus contracts murabaha. Leasing contracts ijara. Takaful insurance contracts. Islamic bonds sukuk. And working capital funding istisna and salam. Hope you had a brief understanding and a basic understanding of Islamic financing. Please stick to my channel and keep watching. Thank you.